afternoon and welcome to a special year-end edition of the Asian Midday Market Watch. With me is my co-host Jeffery Halley, and our guest today is Glenn Yin, Head of Research and Analysis at AETOS Capital Group, coming out to us out of Australia. First of all, Glenn, thank you very much for taking the time to be on the show and being our guest on Market Watch or several times this year. And we look forward to having you in 2024 as well.
Thank you so much for having me, guys.
Now, today is really about a look back at 2023, some of the key highlights, and a look ahead to what we should be expecting for 2024. Now, for a start, Glenn, perhaps you could give us a recap of some key events in the first half of the year.
Yes, Brian. So I might have to let you down on this one because I think the first half of 2023 was mainly characterized by being extremely boring. If we look at the US benchmarks, we'll see that Dow, the Nasdaq, and S&P mostly oscillating in a very narrow range. Less so for the Nasdaq, but the idea is this, that there was a lack of featured theme for the first half. And by this, I mean, if we look at 2020, that was dominated by the COVID and market crashes. 2021 was the ultimate rebound, and 2022 was the end of QE, and markets were debating when the Fed would start to shrink their balance sheet, and of course, a sharp rise in inflation. To multi-decade high, which requires central banks to hike aggressively. But when we come back to the first half of 23, it was more of a continuation of the inflation game. Just when we thought inflation was inching closer to Fed's target, it jumped again and repeated a couple of times. So it was like a sequel of the inflation movie. But these boring events also paved the way for the second half, when investors were rewarded for their patience as central banks finally started to slow down and on the hiking path, and eventually led to hopes of cuts in 24. The only thing for the first half that came to my mind is that gold price hitting all-time high and in May, and that was largely thanks to global central banks increasing their holdings on precious metals. But yes, I'm looking forward to hearing the more exciting bits in the second half from you guys.
But before that, I want to get through your lens, Jeff. What did you think were significant events in the first half?
Well, I think if we look back to 2022, and it's a good place to start, we can reflect on how badly wrong the global central banks around the world got the words transitory inflation, and then the mad scramble to cover that mistake by hiking. And we saw the dollar engaged in a huge rally in 2022. And then, as Glenn said, everything sort of went quiet for the first part of 2023. And often markets, I found in my career, they tend to drift a bit in the first half of the year, and the excitement always seems to happen in the second half of the year, and that seems to be what's playing out now. So we're starting to see talk now, of course, about the Fed finishing its hiking cycle, and they're not the only central bank to get labelled with that. But I guess for Glenn, I'd like to know what you think was dominating investors' minds in the second half of the year, and probably in the last quarter of the year is more pertinent.
Yes, Jeff. So like you said, the second half always gets a little bit more exciting, and I think this year in particular follows that trend. In the last quarter, we saw that inflation is absolutely out of investors' minds. Now we're looking at rate cuts. We're pricing in that optimism for 2024, plus the center rally we got this year that sent the benchmarks to all-time high. So very exciting developments. But we should always bear in mind that on the other side, there are events, the geopolitical uncertainties unfolding on the sidelines. These could sabotage that optimism and could throw off that party. So also very important on the side as well. But like you said, in the currency market, the dollar is gone. So with the DXY crashing through these major support levels, we are seeing the Aussie dollar in particular, and the euros and pounds rebounding. And the biggest talk on the market right now is when the BOJ will start to will start to exit from the negative rates. And with that, coupled with the Fed's cutting, that could really make some exciting moments in 2024.
Now, I want to add something to what Glenn's just said, because he's talked about the BOJ. One of the key themes that I've seen this year, really, and this hasn't happened in 30 years, Japan is back in favor. And I think that the money flows and the flows to Japan has been, for me, big changes that kind of had slipped under the radar. The fact that Japan is back in favor, you actually have a problem with inflation. I mean, the BOJ has wanted a 2% target for decades, and you see sense of life happening in terms of Japanese corporates and just interest around Japan. Gentlemen, what do you think in terms of what are your thoughts in terms of this investment theme? And is this something that you think will has some legs in it? Jeff, maybe you wanna give your insights.
Yeah, well, how I would like to frame that question to Glenn is we all know about the travails of China and its economic performance this year. Do you think that countries such as Japan, markets such as Japan, are picking up those Asian investor flows that want to stay invested in Asia but not in China?
Yes, good question, Brian, Jeff. I think, like you said, Jeff, for investors who would still love have exposure to Asian equities, they would probably look into Japan, and because if they fell into negative rates in 2016, and the YCC kicked in later that year, and this is 30 years, the lost decades since the bubble went bust. So. Before the bubble went bust, we look at the real estate bubbles, we look at asset prices, they were in the sky. And there are talks about China at the moment as well, the debt issues, that the real estate sector is in trouble. All of these issues adding to investors' portfolios. People might, if you still want to keep exposure to Asia, look into Japan or even in Southeast Asia as well. So yes, very interesting development. We're very keen to see how Japan will, especially the foreign flows, will respond to their development in 2024.
Now, again, just a question to either one of you: how much do you think that the Warren Buffett factor played into that whole shift in thinking around Japan? Because Warren Buffett started adding to his Japan portfolio at the end of last year. He started investing in the 5 Sogo Soshas and then kept adding on to that holding. Obviously, this is all done with the blessings of the Sogo Soshas. And for me, that seems to be really the turning point in terms of perception. Gentlemen, your thoughts on that?
Well, I'll start initially. I think part of it was also the Japanese yen and the collapse of the Japanese yen. All of a sudden, Japanese exporters started looking very, very competitive on the international stage. And I think that also gave an initial tailwind to that yen equity rally.
Yes, I think same with Jeff. I'm looking at the currency side as well. We know that Japan relies on imported resources heavily, so that the weakened yen adds a lot of pressure onto the Japanese treasury and etc. So getting out of that super loose monetary policy and eventually stepping out of negative rates is crucial and is a question that must be answered. So now we're gladly seeing that right now is that we have inflation exceeding BOJ's target by a wide margin for a long time. Next thing we need is just that the wage to match that same pace so that people will actually spend and push inflation past that threshold and keep it sustainable. Then next thing we'll be talking about is to actually get out of the negative territory.
Right. So now I guess we need to start looking forward, and we need you to put your magician's hat on, Glenn, and start plucking out some gems for asset classes in 2024. And I do know that, or exactly, put on the Christmas glasses. So we need to start now looking ahead towards 2024. So my first question with regards to that space is, looking ahead to next year, what should businesses and investors be looking out for in various asset classes?
All right, Jeff. I think let's wrap up the yen, because we've been talking about it 2024. I think there will be the end of slow death of carry trades. The yen had skyrocketed against the dollar. It's basically markets aggressively pricing in at the exit and the Fed cutting. So two strong factors, two drivers behind this. Then another thing I've noticed very interestingly is that the strong positive correlation between the 10-year Japanese government bond and the BOJ interest rate. So if we jump on the chart, you'll see 2016 is when both of them moved down. The rates hit through the ground, and now we look at the chart now that the 10-year JGB yields are rising rapidly, and it's sustaining up there as well. So it is something we've never seen since 2016. I'm taking this as solid actions from markets to pricing that cut. But expanding our view onto the global stage, I think what markets are really focusing right now is that rate cuts from the Fed. We talked about this last week. And as the economic projection package came out from the Fed, they are pricing in as much as 3 cuts by 2024. But this is the so-called official guidance from the Fed. But if we look at independent data, for example, from CME, traders are pricing in as much as 100 BP cuts by June 24. So the optimism is definitely there. Whether that's too much or not is another question.
Now, I want to pose a question then for us here in Asia, to both of you in general. If they're pricing in 1%, and Asian currencies, particularly the rupiah out of Indonesia, the ringgit out of Malaysia, they've taken a battering over the last year or so. Are you both seeing perhaps a recovery when the hiking cycle, obviously we're at the tail end of it, when the cuts actually happen? Will we see then a re-rating of currencies that have taken a battering, which obviously have a significant spread over the treasury yields currently?
I'll let Glenn start with this one.
Fernandez, I think my magic is sort of running low, Jeff, and on the Asian currency front.
I don't have any glasses, so I thought you'd best start.
So maybe Brian, maybe you can give us some views of your own on the Asian currencies.
So, because one of the key things is, and let's take the Malaysian ringgit as an example, the spread between the ringgit, the Malaysian dollar, Malaysian interest rates, which is 3%, and Fed fund rate, so it's literally 2%. There has been a significant outflow of funds out of Malaysia in the last 12 months in particular, and that has depressed the ringgit. So any sort of cuts from the Fed is going to have a significant impact in terms of what I believe to be the weakness in the ringgit. And I think then we will definitely have a re-rating of the Malaysian ringgit.
Yeah, I think we need to also look at the underlying economies, whether my anecdotal feeling and evidence from talking to people around the region is that the economies are definitely slowing a bit behind the scenes. Hiring is slowing, wage pressures are falling. Is that going to keep playing, and will that weigh on those currencies, even if the Fed does start cutting, as aggressively as the market prices in? And we shouldn't also forget geopolitics, and politics in Malaysia typically can be quite volatile, shall we say. But also we have to remember that there's a presidential election this year, or coming up next year, in Indonesia as well. It's the end of Jokowi's time in power, and we'll have a new president most likely sometime by, I think, the end of the first quarter. That will be confirmed, unless, I guess, it goes to a runoff. But that uncertainty may also weigh on investor sentiment with regards to both Indonesia and the actual Indonesian currency itself.
Now, gentlemen, the other thing that, especially Glenn, through your lens, Australia. So the RBA obviously has given Australian borrowers an early Christmas by not increasing rates, but there is certainly pressure in the Australian economy around, labor market is tight. Australia has just announced a cut in immigration because literally there's a flood of students coming in and they're short of rental property. There's also the pressure there. What are you looking out for in Australia for 2024?
Yes, Brian. So looking through these festive elements, I'm seeing that the Australian economies are having a bit of a hard situation here. If you know, like you said, we keep our economy running because we have a large influx of net migrants who bring skills and money and inflation and everything into Australia. But on the other hand side, we have this shortage in rental properties. So the rental vacancies are extremely low at the moment. So how do we cope with the questions? How do we cope on the the societal level and on the economic level? So we've had another benign or dovish decision from the RBA this month, but going into 2024, how that tight labor market will play out with that 61,000 jobs added in the latest data, how that will affect the markets. And we also have this sense of recession slowly lurking nearby, by which I mean we have these application per job ads dropping as well, increasing as well. So the availability of labor versus availability of positions is rapidly shifting as well. So looking in 2024, I think Australia is slightly different than compared to the States, but it's an immigration country after all, so it depends on lots of variables on the policy level for Australia.
Glenn, how about bright spots? What are the bright spots that you're seeing in Australia for 2024?
The bright spots, personally, I've locked in my fixed rate home loan, but that will stay valid to beginning of 2025. So the bright spots that we are possibly looking into some rate cuts as well, but the RBA had announced that they not directly, but indirectly saying that fighting inflation is no longer the top priority. So they've delayed the target frame for hitting inflation into the target range is 2 to 3%. Delayed that by half a year. So I think protecting the economy, keep it running hot but not overheating is the priority at the moment. So that's a bright spot. It's not cooling, it's not dropping, it's not a recession. It's just not as hot and just keep things warm.
Now, Jeff, anything you want to add or any other questions you've got to get from some sagely advice from Glenn here?
Well, I must. I know that your main theme for 2024 appears to be the trajectory of the Fed rate cuts, how many and when they will start, and I don't disagree with that. But I think the other big bugbear in the room, basically, for the United States next year comes around in November, and that is the US presidential election. Whatever your views are on that particular outcome from the candidates, but it's really hard to see that not impacting markets in the run-up to the election and also post the result. And I'm wondering what your thoughts are on that situation.
I'm a little bit scared about that, Jeff, actually, because in 2016, when Trump beats Hillary, all the future indices futures crashed, and in 2020, and even more madness unfolded. So it's looking to this year, the year of next year, 2024, being a year of election, the volatility will be there, and noise from political parties and uncertainty will surely be here to confuse traders. So I guess this will be being able to know and have a proper strategy in place to be able to ride through the waves of these stormy waters will be key, the number one priority for anyone who wants to survive this. But yeah, that will be at the end, from experience and historically as well, years of elections will generally see some really good performance in equity markets, and that could have some political implication. Who knows? But it's good. It's good. So bear that in mind. Upside is there. It's just how we keep ourselves safe from being hit by this volatility.
Perhaps don't get rid of all that gold straight away.
Gentlemen, right. Thank you very much for coming on the show. That's a wrap for our special year-end roundup of Biztech's Asian Midday Market Watch. We've been speaking to Glenn Yin, the head of research and analysis at AETOS Capital out of Australia, and this has been Biztech's Asian Midday Market Watch. I'm Brian Fernandez.
And I'm Jeffery Halley.
And this show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.